This is the IUX Education Podcast, your shortcut to smarter trading and investing.
Where complex markets become simple. Let's dive in.
Welcome to the Deep Dive. We take stacks of research, articles, you name it, and pull out the key insights for you. Today, we've got a story that honestly sounds like fiction.
It really is.
Imagine this. A shy teenager borrows, what, $1,600?
Just a $1,600, yeah.
And turns it into over $200 million over his career.
It's an incredible number.
It's just astounding. And it offers this amazing shortcut to understanding some really profound stuff about disciplined decision-making. Not just in finance, but, everywhere.
Exactly. We're digging into Richard Dennis today, famous as the Prince of the Pit. And the truly remarkable thing, the thing that gets me, is that his success wasn't some, secret magic or just pure luck.
Right.
It was built on these surprisingly simple, almost rigid rules that he just stuck to.
Okay, so that's our mission for this deep dive then. Let's unpack how Richard Dennis pulled this off. What were the big lessons he taught? And maybe most importantly, how do those principles actually apply to us today, even if you listening right now are never going to trade a commodity in your life? Because this is really about a mindset, right? A mindset for making disciplined choices.
Absolutely. It's broader than just trading.
Okay, let's get into it. Where did this prince come from? Was he like finance royalty from the start?
No, not at all. Quite the opposite, actually. Richard Dennis, born 1949, just a regular middle-class kid from Chicago. His first taste of the financial world was pretty humble. He was a runner at the Mid-America Commodity Exchange.
A runner. So, delivering messages and orders across the trading floor, kind of like Postmates, but for pork bellies.
That's a great analogy. Yeah, basically, he's running tickets back and forth. But he saved up, scrimped and saved, and then, this is the ambitious part, he borrowed $1,600 from his family.
Wow. Okay, $1,600.
With that, he bought himself a seat on the exchange. And from there, he started trading. Commodities futures, specifically.
Futures contracts, right.
Well,
agreements to buy or sell later.
Exactly. And he started small, tiny positions. But here's the crucial bit even then. Right from the get-go, he had this immense discipline.
It's just that scale, though. $1,600 to $200 million plus. It wasn't like one magic lottery ticket trade.
No, definitely not.
It sounds like it was this slow, steady build based on a really specific, disciplined way of doing things.
That's precisely it. A unique approach.
So what was that approach? This is where it gets really interesting, I think. Dennis had this core idea. It kind of flips things on its head.
Yeah.
Basically said, you don't need to predict the market.
Right. You just need to respond to it.
His motto was simple. The trend is your friend.
Picky.
Yeah. So he'd look for these price breakouts, prices suddenly jump past a level.
Yeah, signal.
He'd get in, set those preset exit points to limit losses.
Crucial.
And then, and this is key, just let the profits run. No fiddling, no second guessing, all without emotion, supposedly.
That lack of emotion is huge.
Yeah.
But if you're not predicting, how do you handle the risk? The market will go against you sometimes. How did he manage that inevitable downside?
Good question.
Well, that leads straight into his really strict risk management. It was absolutely central. He had very specific rules, like never putting more than, say, 2% of his total capital into a single trade.
Only 2%. That sounds small.
It is. It ensures survival. He also used trailing stops.
So the stop-loss point moves up as the price goes up, locking in some profit.
Exactly. And he had predefined exit points for every single trade before he even entered it. No winging it. He famously said something like, you could publish my trading rules in a newspaper and no one would follow them.
Really? Why not?
Because, he said, the key is consistency and discipline. It wasn't the rules themselves that were magic. It was actually following them day in, day out.
Process over prediction.
That's the essence of it.
Okay, it sounds simple when you lay it out like that, but sticking to those rules, especially when things are going badly, when you're losing money, that must take incredible mental fortitude.
Oh, absolutely. That's the real battle, isn't it? The psychological side. Fear and greed are powerful forces in trading. Dennis's system was designed to, short-circuit that, to take the emotional decision-making out of the equation.
So it wasn't about being braver, necessarily.
Not really. It was about having a mechanical process that you trusted more than your own gut feelings in the heat of the moment. By sticking to the rules, even when it felt wrong or painful, he made sure he never, bet the farm. He could survive the losses, which are inevitable.
Right.
And be there to catch the big winning trends when they came along. It was about controlling himself, fundamentally, not trying to control the market.
Okay, now this leads us to what you called the wild part of his story.
Yes, the legendary experiment. This really put his ideas to the ultimate test.
Set this up for us.
Okay, so it's 1983. Dennis gets into this big debate with his friend and trading partner, William Eckhart. Dennis was totally convinced that trading wasn't some innate gift. He believed it could be taught, like learning to ride a bike or play chess.
That anyone could learn it.
Pretty much, yeah. That ordinary people could be trained to trade successfully using his methods. Eckhart, though, he was on the other side. He thought it was more about talent, instinct, something you're kind of born with, nature versus nurture, applied to trading.
So knowing traders, they made a bet, right? A high-stakes, real-world experiment.
You got it.
Yeah.
A bet to settle the argument. Dennis went out and placed these ads in newspapers like the Wall Street Journal, looking for trainees. The key requirement, absolutely no trading experience. They wanted blank slates.
Beginners only.
Exactly. They got thousands of applicants and eventually picked 23 people. Just 23. And talk about divert. They had like a Dungeons & Dragons game designer.
Serious?
Yep. A security guard, someone who played blackjack professionally, an accountant, a musician, really all walks of life.
And then get this, he trained them for only 2 weeks.
2 weeks?
That's insane. Less time than a standard company onboarding.
It seems crazy, right? But that was the point. Could his system be taught that quickly?
Mm-hmm.
And the results, they were just mind-blowing. Dennis gave these trainees his own money, real capital to trade.
Risky.
Very. But these absolute beginners, who became known as the turtle traders, they collectively made over $175 million in profit.
Whoa.
Right.
$175 million in just a few years.
In just a few years. It was a stunning vindication for Dennis. It basically proved his point, trading could be taught. It wasn't just some mysterious innate talent.
Okay, I have to ask, why turtles? That's a weird name. Did they trade really slowly or something?
Huh, good question. No, it's actually a funny story.
Yeah.
Dennis had recently visited a turtle farm in Singapore.
The turtle farm.
Yeah. And he saw how they were systematically, efficiently raising these turtles. And he apparently declared, right then and there, we are going to grow traders just like they grow turtles in Singapore.
Wow. Okay. So it was about cultivating traders systematically.
Exactly. It perfectly captured his belief that he could nurture successful traders from scratch using a standardized process, like farming.
That's fascinating. And for anyone listening who wants the full story on the turtles, there's a great book, right? The Complete Turtle Trader by Michael Koval.
Yes, that's the one. Highly recommended if this story grabs you. It goes into all the details.
So let's try and tie this all together. Why did Richard Dennis succeed on such a massive scale? Can we boil it down?
I think we can. If you look at the whole picture, it really comes down to maybe 3 core things. Things that apply way beyond trading, actually.
Yeah.
First, it was his system-based strategy. He wasn't using gut feelings. He relied on clear, data-driven rules.
Right. Logic over intuition.
Second, just strict discipline. The commitment, the sheer willpower to stick to that system, no matter how choppy the markets got, no matter what his emotions were screaming.
Sticking to the plan.
Always. And third, that rigorous risk management.
Yeah.
Always knowing his potential downside, never risking too much on one idea, ensuring he could survive the inevitable bad patches.
Never bet the farm.
Never bet the farm.
Yeah.
Survival was key.
You know, I think there's maybe a fourth element there too, which is his actual belief that other people could learn this stuff.
That's a great point.
He wasn't hoarding his secrets. The turtle experiment proved he wanted to kind of democratize this knowledge, show it wasn't just for the chosen few. That's a big part of his legacy too, I think.
I agree. That willingness to teach, to prove it was teachable, is significant.
Okay, so bringing it back to you, the listener. You're maybe thinking, great story, but I'm not a commodities trader. What can we actually take away from Richard Dennis? What are the practical lessons here?
Yeah, this is the important part, isn't it? How does this translate? I think if you distill his approach, you get some really powerful universal principles. First, build a system you trust. Doesn't matter if it's for your finances, managing big projects at work, or even like a fitness goal. Create a clear, repeatable process.
Okay, so have a plan. A real plan, written down maybe.
Exactly. Second, stick to it consistently. This is the hard part. Follow your system even when it feels boring, or when things get tough, or when you feel tempted to just wing it. Consistency is where the magic happens over time.
Like doing your weekly budget review even when you don't feel like it.
Precisely. Third, manage risk like your future depends on it, because, well, it often does. Understand your limits, the potential downsides, before you commit to something big. What could go wrong? How would you handle it?
So thinking about the worst case scenario, not just the best.
Right. And planning for it. And fourth, maybe the most subtle one. Never let ego drive your decisions. Prioritize your process over trying to predict the future or prove how smart you are. If the system says stop, you stop. If it says go, you go. Even if your gut screams otherwise.
Remove the ego.
That's tough.
It is, but crucial.
So what does it all boil down to? Maybe. Don't try to be flashy. Just be focused.
I like that.
Richard Dennis wasn't about predicting the next big thing or being smarter than everyone else. He just built a process and followed it. Process over prediction. And that process turned $1,600 into $200 million. It's just a powerful reminder of what disciplined execution can achieve.
Well, that really wraps up our deep dive into the fascinating world and the mindset of Richard Dennis. What he proved, really, is that the secret to truly extraordinary success often isn't about being inherently smarter or luckier. It's about being exceptionally, maybe even boringly disciplined.
Yeah, boringly disciplined. That captures it well. And it leaves us with a thought to chew on, doesn't it? How could applying a really rigorous system-based approach in your own life, whether that's work or a hobby, personal growth, whatever, how could that lead to maybe unexpected, even extraordinary outcomes for you?
Something to think about. Thank you so much for joining us on this deep dive. Next time, we're jumping into another game-changing figure, someone whose ideas radically shifted how we understand a really important concept. Definitely tune in for that one.
And this is the IUX Education Podcast, where trading confidence begins.
That's a wrap for today. This episode was brought to you by IUX Trading Platform, your trusted partner for smarter investing.
And this is the IUX Education Podcast, where trading confidence begins.
That's a wrap for today. This episode was brought to you by IUX Trading Platform, your trusted partner for smarter investing.